Hello everyone. What happened last night in the US market? Is the government shutdown really ending? Second, what Goldman Sachs said about Indian market? And third, updates regarding India's unemployment data and Bajaj Finance results. All this we are going to discuss in our regular pre-market report video for today, 11th November 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, about what happened last night in the US market. As we discussed yesterday, the situation was very fluid with ongoing discussions in the US Senate regarding ending the US government shutdown. And now there is a positive development. US Senate voted 60-40 in a test vote to move towards passing the funding bill until at least January 30th, 2026. So now 8 Democrat senators offering their support to Republican Party on the conditions that offer to vote extending certain healthcare subsidies as well as the assurance that US government would recall those federal workers which Trump laid off because of the shutdown. However, please note the Senate will still need to hold a final vote on the spending bill, after which it will need to be considered by the House of Representatives before being signed into law by US President Trump. So it's not yet done, but the progress is very positive. Hence, this optimism made the US market to rally significantly last night. Dow Jones increased 0.8%, S&P 500 index was up by 1.5%, and Nasdaq outperformed all, rallied 2.3%. In case of VIX, from 19 on Friday, it dropped 8% and moved closer to 17.5. Then about oil. Oil prices increased slightly as there is a potential fuel supply disruptions due to the fresh US sanctions on Russia as well as the Ukrainian drone attacks on Russian refineries. At the time of this video, Brent crude trading little below 64 US dollars per barrel and WTI crude trading at 60 US dollars per barrel. Regarding Indian ADR, as it is, all stocks closed positive. However, all of them closed more positive on the Indian market. Hence, if we calculate the arbitrage, HDFC Bank ADR showing positive 0.5% arbitrage difference, ICICI Bank and Reliance GDR showing flat difference. Whereas Infosys and Wipro ADRs both showing negative 0.5% difference. So banking stocks and Reliance showing flat to positive, but IT stocks showing slight negativity. Then about Gift Nifty, early morning today it's trading at 25,685. Equating that with the spot market, it's indicating a gap up opening of only 20 to 30 points. Please note this could change as time progresses. So those were the things happened in the dollar market. Moving to India related info. First, about Goldman Sachs upgrade on Indian market. Like how during weekend HSBC released the statement that they were positive on India. Similarly, yesterday evening, Goldman Sachs has upgraded India to overweight from neutral. Here, they said they are expecting the Nifty to increase 14% by year-end 2026 to around 29,000. Regarding the reason, Goldman said India's earnings downgrade cycle has bottomed out, which is the first positive. In addition, RBI rate cut expectation, easier liquidity, GST deductions, and slower fiscal tightening, all these have made the Indian market attractive. Furthermore, they highlighted the DIA strength that since 2024, despite FII selling 30 billion US dollars, strong DIA support of over 70 billion US dollars have supported the Indian market which all are really good. If we see sector-wise, out of 17 sectors, 7 sectors such as financials, consumer staples, telecom, auto, defense, oil marketing and consumer durables, they were overweight. And yesterday, they upgraded defense and consumer durables newly to overweight category from neutral. Then, if required, please pause. These are the neutral sectors. Here, clothing was downgraded from overweight category to neutral, whereas metals and mining upgraded to neutral from underweight category. Then finally, IT, pharma, infotech and chemicals are in the underweight category. Infotech is the new sector that was downgraded to underweight from neutral. Hence, today we could say all these sectors will be on focus with their respective rating stance. In short, after HSBC on the weekend, Now, Goldman Sachs also came out with a bullish call on Indian market. This is very positive for the sentiment. Then second, about India's unemployment data. I know a lot of people don't like and don't trust the Indian government data, but this is what yesterday Minister of Statistics released. Hence, I have no option but to discuss. I mean, India's unemployment rate for the Q2 quarter decreased to 5.2% from 5.4% in the previous quarter. They highlighted this is helped by higher rural employment and the rise in female participation. Rural unemployment declined to 4.4%, while urban unemployment increased up to 6.9%. And the female participation rate in India increased to 33.7%. So, overall, the data signals steady labor market improvement. Whether we believe this data or not, but from the market perspective, this is a positive news. Then, third, about Bajaj Finance quarterly results. Year on year, Bajaj Finance both net profit and net interest income increased 22%, but both slightly below the analyst expectation. In addition, there is a marginal deterioration in the asset quality, and Bajaj Finance trimmed their full year FY 2026 guidance of assets under management to 22 to 23% growth from earlier 24 to 25%. So, overall, results were strong operationally but missed the estimates due to weaker asset quality. Hence, Bajaj Finance and the whole NBFC sector will be on focus today based on these results. As a summary, US market rallied significantly on hopes of government shutdown ending. Then there are strong domestic positive macros such as Goldman Sachs Nifty rating upgrade and low official unemployment rate under all. Overall, both global and local, the sentiment is largely positive, but there is some level of hesitation because of this delaying India-US trade deal. One more thing, I'm truly sorry regarding the Delhi blast. I hope Indian government arrests the responsible people. I'm not sure about its impact on the Indian market. If any, it's negative. Moving on about institution, in the cash market, after just one day of buying, again FI turned as net sellers. Yesterday, the net sold for 4,100 crore rupees, whereas as usual, DA was net buyers. The net bought for 5,800 crore rupees. Moving to participant-wise open interest analysis, yesterday index future open interest increased 5.5%, whereas on the index options, 11.5% new call option open interest were added and 40.5% new put option open interest were added. Because of more put option open interest addition, the PCI ratio increased to 0.99 from 0.94. Then stance wise in the index options, client is still holding net 8.8% open interest favoring the bullish position, whereas FII and property traders having net 5.7% and 2.7% of their open interest respectively favoring the bearish position. In case of future index, client having 69% of their open interest on the long side and property traders also having 56% on the long side. Whereas on the other hand, FII is holding massive 87% of their open interest on the short side. Moving on, from today onwards, I am planning to include the days end 25 delta risk reversal for Nifty. Hope it's useful. At the end of yesterday, 25 delta call IV is 10.9% and the 25 delta put IV is 11.3%. So the 25 delta risk reversal is negative 0.4%, which means put options are slightly more expensive than call options at equivalent delta. This shows mild downside protection demand and traders are paying a bit extra for insurance against a fall. So the skew is bearish but soft, suggesting no panic or heavy short-term fear. Market participants are simply hedging modest downside risk while expecting the index to stay largely range-bound or drift slightly lower. Here, please note this is not at all a suggestion, but this is what the day's end open interest analysis is indicating. Sharing this for info purpose only, please don't make trade based on this. Then, as per stock open interest, Trent, Fortis, LIC, NCC, Mankind Pharma, Solar Industries, and Adani Green are some of the 41 stocks that got an increase in open interest along with a negative close, indicating the short build-up. On the other hand, Nykaa, Amber Industries, Tech Mahindra, SAIL, BHEL, and Manapuram are some of the 76 stocks that got an increase in open interest with a positive price close, which means these stocks indicating the long build-up. About the things to look out, Earnings wise, Bajaj Finance, Bharat Forge, Biocon, Bosch, Container Corp, EAH, Fortis Healthcare, Godrej Industries, and PA Industries are some of the major companies scheduled to release their results. So, multiple sectors will be on focus today based on the earnings. Macro wise, there is nothing I'm aware of is scheduled release that could influence our Indian market. Coming technical, Nifty opened higher and traded within a narrow range of 25,500 to 25,650 during the session. However, in the second half, it faced some selling pressure and closed above the psychological 25,500 mark. Thus, on the daily chart, Nifty formed a bullish candle with an upper shadow, indicating a positive bias despite pressure at higher level. In addition, on the higher side, it encountered resistance near the 50 exponential moving average while failing to sustain above the 21 exponential moving average on the closing basis. Furthermore, RSI climbed to 52, though it still remained below the reference line, and MACD continued to show a bearish crossover. Hence, if Nifty managed to hold 25,500, which acts as an immediate support, an upward move towards 25,700 to 25,800 in the upcoming sessions is possible. On the lower side, 25,300 is expected to remain as a crucial support level. In case of Bank Nifty, it opened 30 points gap down and remained range bound throughout the session, then closed at near 57,930. Thus, on the daily chart, Bank Nifty also formed a bullish candle with an upper shadow, following a bullish engulfing type pattern formation in the previous session. This indicates a positive trend despite some pressure at higher level. In addition, it continued to sustain above all key moving averages as well as the middle of the Bollinger Band, with RSI climbing to 60 but still reflected a bearish crossover, MACD remaining below the reference line. Hence, going ahead, the zone of 58,100 to 58,200 will act as an important hurdle, while on the downside, 57,600 to 57,500 will act as the important support. Regarding the options front, the maximum call option abundance was at 25,700 strike, followed by 26,000 and 25,800, with maximum new call option rating at 25,650, 25,700 and 26,100 strike. On the other hand, the maximum put option abundance was at 25,500 strike, followed by 25,000 and 25,400 strike, with the maximum new put option rating at 25,500, 25,550 and 25,600 strike. Thus, from options data, it's indicated that Nifty is expected to trade in the 25,400 to 26,000 range in the short term. So that's all in this video. Hope you got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI research advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.